Hi, Kristen from Altitude Advisory. I just thought I'd get in front of you guys with a few things going on. We're almost at the end of the pandemic, fingers crossed. I wanted to touch on a few topical issues for businesses in Australia. And I'm joined today by Tim, Portfolio Manager from Catapult Wealth, with a few insights on what might assist you, I suppose, in navigating these uncertain times. So at the moment, very topical, we've got a Russia-Ukraine war, Tim, and that's going to affect Australia significantly. We're seeing petrol prices and a couple of other things. What's your just take broadly on what's going to happen in the short term?
Well, it's interesting, isn't it? So we've had Russia move into Ukraine, and so far, none of the West have really come to help. So there's been sanctions on Russia, and their economy is going to get devastated because a large portion of their exports is, oil and LNG gas. And then they're basically been ejected from the banking system, the SWIFT banking system that you would have heard about.
Yeah.
They are very isolated now, but surely this was a calculated risk, and they knew this was going to happen. But in terms of financial markets, in terms of what the effect on us today, you must remember that the stock market is not the economy. So from an economy point of view, we are going to see more oil and energy being bought from other sources. And so we'll see companies like Woodside and Santos for us will get a bit of a kick. And also Russia is one of the biggest exporters of wheat.
Right.
So for our local farmers, there may be shortages.
Yeah.
I mean, a lot of Russia's exports are to Africa and the Middle East. But
and urea as well goes into fertiliser.
That's right. Yeah.
So it's going to impact our farming clients significantly.
Yeah, that's right. You use urea to get better outcomes from your cropping as well.
Yeah.
But I think what we've seen was that we saw an initial dip in the markets, which we've seen from the Gulf War and all that sort of stuff.
Yeah.
And then things have come back up again.
Yeah.
So the US recovered strongly. Today we're having a strong day in the ASX. And the reason why that is the US were touted to do 7 interest rate rises this year.
Right.
And so when interest rates rise, it's basically a deflator for the stock market.
Yeah.
But now the Fed, and essentially the European Central Bank have said as well, whoa, let's just wait and see what's going to happen. And perhaps it's not 7, perhaps it's 5 or 4.
Right.
And so that's what's propping up the market. So as much as this is a crisis, and to the people of Ukraine, our hearts go out to you.
Yeah.
But the financial markets are a completely different animal. So for us, day to day, we're going to see price inflation continue to flow through.
The cost of goods at the stores is going to be incredible pressure on families, right?
That's right.
Interest rates over the next year, where do you see them ending up?
Well, in Australia,
at market, not the Reserve Bank.
Well, in Australia, it's a bit different. Our inflation is high, but not as high as the US.
Yeah.
But the market is expecting them to rise at the end of this year. They all start to rise in this year, if not early next year. And so it's just a matter. Our real wages are getting evaporated, right? Yeah. The inflation rate and wages just aren't keeping up. And so if wages start to pick up again, well, that's just a self-fulfilling prophecy on inflation.
Yeah. Well, this is really what the government wants: wage rises.
Not at the cost of inflation. So yeah. So that's the big concern. Yeah. So because the big thing that people are talking about is stagflation. So that's where you have inflation but low economic growth, and that's a very bad scenario for central banks to target because they don't have very many weapons to target that sort of stuff. So.
Yeah, right. So day to day with this war, you're seeing a rebound over the next month or so. We've seen a little bit of it today.
We'll see volatility for the rest of this period, probably maybe next few months. But historically, a small conflict like this, it just rebounds. However, our good friend Vladimir Putin has dropped the nuclear word a couple of times, so
touchy.
The market is always a little bit going to price a little bit of a bigger scenario. Very, very unlikely this escalates larger because the US is not keen for it. After withdrawing from Afghanistan, that was a big disaster for them. But the market will always have a little bit of just maybe.
So on a confidence scale for our clients out there this year, should they be feeling okay?
I think so. From a share market point of view, I think that this is potentially going to wind back interest rate rises, and so that's what the market's a little bit happy about now. From a business point of view, there's certain sectors that are going to do great from this. So it just depends on whether it escalates further. So
from uncertainty over the last couple of years into a little bit more uncertainty. But all things look...
Always uncertainty, yes. So just a different degree of uncertainty.
Fabulous. Thanks so much for the chat.